All right. Hey, everyone. Thanks for joining me. I'm just catching up here with my technology. So thanks for joining me for another GreenBridge Investing Market Analysis. In this session, I'm going to be talking about Bitcoin, of course, because we have this situation that can be very confusing. And then I'm going to talk about the stock market situation as well, and the US dollar with gold and everything else, because there's some interesting things going on with the bond market, which could be making things confusing. But it's very important to really zoom out and just look at the bigger picture. All right, so with that being said, let's get this thing started. All right, so this is for educational purposes only. For investment advice, please consult the licensed investment advisor. All right, so yeah, so in these videos, I'm gonna appear in them every once in a while, but I'm trying to get a simultaneous stream going on with TradingView. So when I get that figured out, then I'll appear in these more. But it's not like I have a pretty face anyway, right? I have a face for radio, so I don't think you'll be missing much by not seeing my face. Plus, you could see me on Tuesdays on Talking Markets. All right, anyway. All right, so enough joking around. If you're new to GreenBridge and you'd like to know more about our swing trade strategy and all that stuff, just the links are in the description below for what we do and all that stuff, the free trial, everything there. So just read the description below and all that information is there. If you're new to the channel, please make sure you press the like button and register so that you can get an email notification every time I stream one of these. All right, so let's get started. If you have a question about a stock or a market, please share it in the chat now so that I can, once I go through the chat, then I can analyze your market. All right, so let's take a look. Hey, it's good to see everyone. Shay Shank, good to see you. Michael, right? Yeah, Michael, how you been? All right, and DJ, all right, all the old people, not old as in old, you know what I'm talking about. Our original followers. Nice to see you all. Okay, cool. Hey, HS. Yeah, I don't know where you've been, DJ. You miss me. I've been here. You're the one that's been missing. All right, with your AMC call and all that kind of stuff. Did you see NYCB, by the way? All right. Anyway, all right. So let's talk about Bitcoin, and let's see what's going on here. Hey, Gabriel. Good to see you. All right. So here's the thing. We had the pullback, right? And Andrew mentioned there was like talk, I guess, on Twitter or something. It was trending, you know, buy the pullback or whatever. Whenever you see something like that, that's a red flag. Because if it's that obvious and everyone's thinking the same thing, it's usually not a good idea, first of all, okay? But you can't go by that alone. So you need some more information than just that. But that is something that you should keep in the back of your mind. The second thing is, and more importantly, is the red candles, these large magnitude red candles. Here, I'm highlighting them with this box. I'm going to make it nice and big so you can see. Those two candles, if you notice, they're a lot bigger than all the recent red candles going back, you know, a few weeks. They're very big. That magnitude means something. So it means that the momentum is still most likely bearish. The bears are still in control. So even though a inside bar developed right here, which is typically a setup for our swing trade strategy, right? We like to take those long in certain situations when they break the high of the inside bar. We weren't interested. I was not interested in taking this one, even though it took out the inside bar high. So I was not interested because that bearish momentum is still most likely in play. So it's too early. And this is going to be the same for all those junk altcoins. Now, I'm exaggerating with the altcoins as far as junk. Not all of them are junk. You know, some people get upset when I call them all junk, but most of them are. There are some, if they provide some sort of value, great. You know what? There are a couple that maybe provide some value. But my point is this with the altcoins. If Bitcoin doesn't agree, if Bitcoin is not setting up to go higher, and your altcoin is showing a setup, like let me show you an example. Litecoin, right? Litecoin, look, Litecoin took out the inside bar high, and it was giving off a nice little buy signal right there, right? But why would I take Litecoin? Does Litecoin trade on its own? Does Litecoin, you know, do better than Bitcoin? No, Litecoin is not even pushing all-time highs. Now, Ethereum, sure, okay, it's done its own thing for a little while there. But basically they follow Bitcoin. So why would I take this long signal if Bitcoin doesn't agree with it, right? Or if it's in the same situation as Bitcoin? That's a very important consideration when it comes to short-term oriented strategies like swing trading. Now, position trading is a different story. This is a pullback, and you're going to see this across the board, right? I mean, when Bitcoin pulls back like this, all the altcoins are going to be pulling back significantly. I mean, look, let me pull up some garbage ones like Neo. Look at Neo. Same situation, right? Inside bar, it's fooling around. How about some other ones? XTZ, USD. Yeah, let's take a look at it real quick. Same situation, right? So in these situations, when it comes to position trading and inventory, if you have an allocation plan, and this would be a time to take a small bite because you're buying near a low. Can they go lower? Yes, but you're prepared for that. That's why you're taking a small bite as per your plan. If you don't do that and you get too big, then you're at the mercy of the market. So that's the mistake that a lot of people make. They just pile all in. Okay, I got the pullback, but if Bitcoin goes lower, they're all going to go lower. All right, so just something to keep in mind. Now, here's the thing with altcoins. You want to allocate some of your portfolio capital to altcoins, fine. That's fine. But you should make sure, I would suggest making it a conservative allocation, meaning if you have, let's just say maybe 5%, or maybe if you want to be a little more aggressive, 10%. Some people are like 100% or, 50% invested in these things. Not really a good idea, okay? Because these are not high quality investment grade assets. I know everyone's getting rich and all your friends are getting rich because they bought these lottery ticket coins at the absolute bottom and they piled in with a couple of $1,000 and now it's worth all this money. Okay, great. That's a lottery ticket. It can happen, but investing in these things with that type of expectation is a bad idea. There are so many better instruments out there that actually offer real value, okay? Like stocks that produce products and have a viable business model and all that other stuff. Anyway, all right, so that's my rant on portfolio stuff. So let's talk about, that's Bitcoin. Let me know if you have any questions. I'm going to run through the chat here in a moment. Let's take a look at the stock market real quick. All right. So now the stock market's been interesting. I sent out the closing trade for the UVXY calls yesterday. Am I sorry that I did that? No. Here's why. It looks ugly right now, but we still have not taken out support. Okay, this is the NASDAQ. Let's take a look at those UVXY calls. And yeah, look, there's a little blip in them now, right? So it's back to $10, right? I had the $12 call and I had the $15 call from March. Now it's starting to perk up now, but the thing is, we're going against very severe time decay in those calls. And now that we're in the front month, any little time wasting that this thing does, those premiums are just going to go to zero pretty quickly, right? So that's why I figured let's just get out and we'll wait for another trade. Now, so yeah, we got the little perk up. If I had seen this perk up yesterday, I probably wouldn't have sent out that order because, all right, I'd give it a chance. But hey, I sent it out. And the reason I sent that out was because I didn't like the buy signal in the S&P, which is just completely reversed, right? And gave it back. Yesterday, we had this price action right here, which was a long signal, which means we were probably going to get another leg higher. If we got another leg higher in this thing, then these calls are going to go to zero. So, of course, they probably knew my thought and it reversed. And look at this, candle just gave it all back. So this bearish outside bar is pretty bearish, right? It's a pretty bearish reversal, especially after a buy signal attempt like we saw in the S&P. So this is going to affect stocks. This is going to affect a lot of things. Now, some people were talking in the chat room about the bond market perking up a bit, right? Bond yields are going higher, which means higher interest rates. Market doesn't want to hear about higher interest rates. Let's take a look at the 10-year note. Let's see, 10-year, hold on. What is that, US 10? Let me see. Now, usually, we don't pay much attention to bonds, but they are an indicator of interest, right? Interest rates. And the Federal Reserve, you have to understand something about the Federal Reserve. They have a number of ways and a number of tools that they can use to control interest rates. they don't always have to talk about it, right? Chairman Powell doesn't always have to talk about what he's going to do. They can do stuff out of the public eye, right? Not in your face. They could do stuff, in the actual open market. So if they sell bonds, right, the bond price goes lower, and the bond yields go up. Bond yields, treasuries going up means higher interest. Look at that steep pullback, right? We're at that range low there. So without him saying, hey, we're raising interest rates, they have other ways of doing it. Okay, that could be that. I don't know, but it could be. All I'm saying is the Federal Reserve has other means of doing it, not just changing the actual interest rate itself. Okay, now also, let's take a look at the dollar index real quick. Okay, look at the dollar index. So the dollar should be happy about this, and the dollar is still just kind of hesitating. So here's the thing. The question is, do we have inflation? Well, if you look at all the commodity markets, they're going straight up. We looked at them the other day, right? Like we looked at stuff like soybeans. Okay, soybeans, which is what, ZS. So if we take a look at ZS1, right, the soybean futures, I mean, look, they look like freaking altcoins. Look at that. So they may not be at peak levels where, inflation is clear, but the point is there's something going on here. Look at that. I mean, since August, there's something going on here. And many commodity charts look like this, okay, when it comes to like the food and the softs and all that kind of stuff. So anyway, the point is we have to keep an eye on the dollar index. The dollar index is going to be our key. It's very easy to follow. The question is, does the dollar index break the bearish trend or not? Okay, right now the dollar index is in a bearish trend, even though it's trying to turn itself around. Okay, with this outside bar today, it's trying to do something. That doesn't really mean anything, which goes back to like the stock market. If the dollar index continues lower and takes out this low, okay, with 89, what is that low there? 89, whatever, takes out that low, that will be a lower low, continuation of the bearish trend, which is a typical sign of inflation. And I would expect the stock market and everything else to at least hold up, okay, based on that. There could be other variables that weaken it, but that's what I'm looking at right now. So I'm not going to be, I'm not going to react to this stuff going on with the stock market at the moment. The S&P looks ugly, right? But it hasn't taken out, it's still messing around this support area, okay? And as long as it does that, I mean, we haven't even taken out the pin bar low yet. We're close, but we haven't taken it out yet. Do we consolidate or do we break lower? I mean, this is a pretty nasty bar, so I would expect momentum may continue. And, if worse comes to worse and we have to get it back into some UVXY, I don't know. I mean, I'll keep it in mind, especially if I see an inside bar develop over the next, tomorrow or early next week. And I would probably consider June calls at this time because the time decay, like on the March calls, is going to be too much. And I don't like front month. I don't like buying front month calls. Anyway, so that's what I'm looking at there. These are important. This is important consideration because look at stocks. Look how the stocks are reacting today. Here's Jumia. Okay. Here's Qualcomm. I mean, look, everything is getting hammered a bit. Here's FUV. Okay. I mean, look at that. There was a buy signal developed. They had a buy signal the other day when the market tried to turn, gave it all back. That's why you can't jump into all these things, even though there were buy signals all over the place yesterday, because now you'd be caught in it. Okay. Here, how about this one? PubM, right? People have been talking about this one in the chat. I called this one, I sent it out to our members a few days ago. Thing gets stopped out, right? First, it goes to its first target the same day, right? That was here. The trade becomes active, goes to its first target. The next day, it gets stopped out. And then the next couple of days goes to target 3. Okay, so how do you explain that one? That was a low float stock. And, some people managed to get a piece of that, but that was tough because it got stopped out. So we can't count that as a win, although it reached target 1 before getting stopped out. So the risk at least was reduced by 1/3. All right, so this is not a market stock. Clearly, it's doing its own thing. Okay, that's what I like about these low float, high short interest stocks. They can do their own thing. Unlike an altcoin, which really can't do its own thing for the most part. Okay, so anyway, just wanted to throw a few stocks in front of you there. Nikola is another one. I've been watching this because I want to buy Nikola. I want to send out a trade on this, and I was thinking about doing that today, but not with that candle. I like the formation that's been developing on Nikola. All right, I like all that. And yeah, I know people hate Nikola because their fundamentals aren't that great, but I'm not following fundamentals. I'm only looking at setups and momentum. A lot of times, before a piece of good fundamental news comes out, there will be a certain type of setup on the chart, and a lot of times you can get in earlier. By the time the news comes out and everyone starts chasing it, that's the time for us to sell, okay, not to buy. Anyway, so I just wanted to throw a few of those at you. Let's take a look at gold real quick, all right, and then I'm going to get to your chat. So I see there's a lot of questions in the chat and a lot of stuff, so I will get to that in a moment. So here's gold, right? Now, I've been talking about gold and buying gold miners, buy gold miners, and the gold miners obviously have been suffering a bit in this. Gold is pulling back to this support level. Now, I was just talking to someone in our chat, and he was saying that if gold goes to like 1650, it would probably be too much for him, right? And that's understandable. When you're talking about inventory, the thing is you cannot get too big too fast, and if the market, if you're all in, okay, like say for example, like on wheat and precious metals, I'm all in, right, on wheat and precious metals. It looks like garbage right now. I'm not going to keep buying more. I've bought enough. Now, if the market breaks lower and gold goes to 1650, that is the only time I will make an exception and just add a little bit more to the position, just because how much lower is gold going to go? Is gold going to go to 1,000? It's hard to believe, but here's what you have to look at. So everyone focuses on the small time frames, and I keep pointing this out. When you look at the bigger picture, that's not a bearish chart. So even though it may test lows, it may scare some more longs out and this and that, and they can blame whatever they want and this and that. Gold is in a great location to be buying, okay, as far as whether it's physical, whether it's gold miners. If you're new to physical, you're better off with the mining stocks because they pretty much will follow the spot price. You really need to know what you're doing with the physicals. You know, you have to understand how those markets work. Andrew talks about that all the time because, you know, he's a dealer in that area. The point is, this is not a place to be banging out gold. This is a place to be buying it. Great location. Now, what if it breaks this support? Well, it may go lower. And if you're not all in to your miners, that's an opportunity to take another smaller bite. Again, that's not the swing trade mentality. That's the inventory mentality. It's very important that you have your plan determined in advance and you know how much you're going to buy each time, okay? And, you know, if you don't want to use the charts, that's cool. You know, you can just, the 1st and on the 15th of each month, you make a small purchase and you're averaging into it. When gold starts pushing 2,000 or 3,000, that's when everyone's going to go berserk. Oh, should I be buying gold? Those people right now, gold doesn't look good. Gold looks too risky right now. But this is usually when the opportunity is the best, when it looks its worst. And it doesn't even look that bad, okay? This is a possible triple bottom. Gold looking its worst would be at like 1650. All right, so anyway, just wanted to point those things out. Again, we talk about those mining stocks. Newmont Mining is another one. Look, they all look the same, right? They're all pushing their lows. They're not liked right now. This is where you want to be buying inventory, but you don't want to get too big, okay? Because if there's an extreme move, you may get emotional if it's too painful, and then that will lead to banging it out at the least opportune time. Okay, so those are the things I wanted to cover. Let's get into the chat now and see what people want to know. So Shashank is asking here, which time frame candle is good for day trading? That's a good question. Day trading, it depends on your strategy. It can be anywhere from a 5-minute chart to a 1-minute chart or even smaller. I mean, you can even look at 30-second charts or 5-second charts. I've looked at them, you know, but you really, really have to have a well-defined strategy to do that. I would not recommend working with time frames that small unless you have a lot of experience, because the noise, you'll lose all your money just on the noise. Okay, so yeah, so I mean, I'd say the average time frame for day trading is about 2 to 3 minute, either a 2-minute chart or a 3-minute chart. But again, without a well-defined plan, it doesn't matter what time frame you use, you're not going to make money. So you really have to have a strategy that's very, very strict. You know, has a very specific setup. You know where you're getting out when you're wrong and all that kind of stuff. Okay, so anyway, good question. Hey, Michael. Okay, cool. So let's see. Michael, HS, DJ, Gabriel, Caleb. Hey, good to see you. Mario. Hey, nice to see you. All right, Mike. Cool. How do you like NK for a swing trade? Michael asks. So let's take a look. All right, this one. All right, so here's a situation very similar to that Bitcoin situation, right? Look at this. So first things first, let's look at the trend. Trend is clearly bullish, right? No question. Trend since October there. Nice series of higher lows and higher highs. Next thing I want to see are support and resistance levels. They're not very clear on this chart, but those lines are probably the points where you'll see some type of price reaction. So your nearest one is around the high 28s. Now, just like Bitcoin, you're up against this sharp bearish momentum. Okay, so bears are still in control. I don't like it as a swing trade yet. While the location is better than buying the high, that's for sure, right? You're not buying up here. I would prefer to see some stability, just like I'm waiting for in Bitcoin. So I want to see, especially with this bearish pin bar developing here, definitely don't want to buy after seeing something like that. So what I do want to see is a pullback into this area, right? Somewhere in this area here, perhaps the $30 area, or the high 28s, somewhere in there. And I would like to see a failed low or double bottom. Right now, that would be at least some form of stability. Also, I would expect the stock market, at least the NASDAQ or something, to be doing something similar, because obviously this looks like a very similar reaction to the NASDAQ chart or the S&P chart. Okay, so I'd want to see at least some sort of price stability there. I don't want to see the market selling off and then this thing trying to find stability and then buying it while the market is selling off. So good question about that. Hey, Anthony. DJ, I didn't see NYCB. You owe me one more call. Yeah, I know. Yeah, well, Pubmatic was nuts. So, I don't know. Not too many people got it. Some people got stopped out. I got stopped out of it after the first target. So I didn't get to enjoy that third target on that one. But yeah, NYCB is at like over $12. And, I had bought the $12 calls originally back in like October or whatever, but I bought January's. I should have bought February's or March's I should have bought. I would have made money on those. Anyway, DJ, okay, so XAU, gold. All right, so we went over those. Well, I went over so if you want to see the stock, I went over XAU. Let's talk about Barrick Gold. So Barrick Gold, that's the stock. So again, all these stocks are going to look similar to spot gold. I mean, look, they're all on their lows. Okay. People again are going to focus on all this price action here, but that's just a reaction to gold. This broader, again, just like gold, we can say that this is a pullback in a broader bullish trend, which makes it an attractive location. In fact, there's some support here which was taken out, okay, which was what? Basically the 22.25 area, somewhere in that area there. Here, let me just highlight that. 22.25. The next support on Barrick Gold is around where it is now, right around here. Okay, so basically 19.5. So again, great location to be putting on more inventory. As far as a swing trade goes, there's no setup there. You have the location, potential stability if you get the failed low here, right? You're in the right location for that, but you need a bullish candle or some kind of reversal candle to develop there for a swing trade. Like I said, for inventory, if you're not all in yet, hey, it's a low, okay? Yes, it can go lower, but the whole idea of the small bite is to allow you to pretty much get in at any price without taking an unreasonable amount of risk. The whole part of the planning, which is, when you have your allocation figured out, let's just say you have $50,000 to invest and you're going to invest 5,000 of that, which is 10%, into gold or gold mining stocks. Now you're going to cut up that 5%, or I'm sorry, 10%, in, the $5,000. You're going to cut that up into smaller allocations until you're fully invested into the stocks that you're looking for, right? So let's just say you split up that $5,000. It could be 2 stocks of $2,500. It could be 10 stocks of $500. You have to figure that part out. All right, and then once you're all in, that's it. You let it. That's your investment, and then you let the market work from there. if you keep, the mistake people make is, again, they keep putting more and more in, more and more in, and it's too early and the market has an extreme move and now they get margined out. You want to avoid that. The whole purpose of sizing strategically is to avoid that situation. Okay. Caleb, okay, so silver. Okay, silver, are you talking about I guess you're talking about the CFD silver? So silver is going to follow gold generally, but look at this. Silver is not exactly following gold, right? Gold looks pretty much like garbage, and silver is fooling around on its highs, near its highs. Okay, so this is not a great place to buy silver, but it is acting relatively strong because, relative to gold, silver should be here, all right, and it's not even close. So silver obviously has some strength in it. When gold starts to go, when gold starts to recover, silver will probably break out, okay? What is that, 29? So you see silver pushing 30. If gold turns around and you see gold like back into the 1850 area, I would expect silver to be pushing 30, right, based on this relative strength. Now, where you buy silver, I'm not a big fan of the silver CFD. You can consider physical silver, but I'm not an expert in that. So if you're looking to buy the CFD, at least, wait until you get a slightly better price, because right now you're fooling around the range high. Okay, so maybe the middle of the range. Middle of the range is a very random area, but if it's relatively strong, okay, also you're buying into like a double bottom there, you wait for like a reversal, that would be one area to consider if gold pulls back further. Also, you have the range low, which would be ideal, but don't know if it'll get that far, which is what, the $24 area. So there's been, there's a physical shortage between gold and silver. So this makes sense as far as where silver is, but for the CFD, since you have to use leverage, I'd prefer at least a slightly better price or better location compared to where it is now. Okay, so either wait for the middle of the range, 25-ish, or into that lower part of the range. That would give you a higher probability, better reward risk for a swing trade. If you're looking to invest into silver, the CFD is probably not the best instrument. You have to pay basically swaps on that, which are like interest, and there's all kinds of problems with that. So I don't like they're not meant for long-term investing unless you're the broker, of course. So if you're long-term on silver, you're probably better off doing silver mining stock, right? Like AG, which looks very similar, okay? And wait for a pullback on AG. With silver pulling back, that would give you some reasonable exposure to silver without having to deal with the nonsense and the leverage that you have to deal with on the CFD, and you don't have to be an expert with the silver, with physical silver, right? The mining stock will behave appropriately. Okay, so anyway, that's a good idea. Thanks for asking about that. POW, CHF USD. So the dollar, franc against the dollar. I haven't looked at these Forex charts in a while. They've been such a pain. Meanwhile, like the euro gives a buy signal and it turns right around. So here's the dollar franc. Okay, so you're asking, it's usually, so this is CHF USD. Usually I look at USD CHF, right? So it's the inverse. So it's a dollar first against the franc. So this has obviously been reversing with dollar strength. This is what you should see with the dollar strengthening, right? Now, so let's look at support and resistance levels. This thing has been, Forex in general has been very difficult. This is going to reflect the US dollar, and the US dollar, as we know, has been in a bearish trend. Now, this thing is changing a bit because in a bearish trend, you shouldn't break support. You shouldn't break resistance, but this thing has basically took out a resistance level. Now, it hasn't cleared it decisively yet, and it may still turn around. So this is a tough spot. I wouldn't go long dollar franc here because this can easily fake out, especially if the dollar decides to go lower. Then this would actually be a good place to short it, if anything. Okay, you have an inside bar. Well, that's not an inside bar now, but if you get a sell signal, you take out any of these daily lows, that could be a signal to go short. I have no problem shorting Forex pairs, and you're looking at a range low of 88 cents, that 88-cent area, something like that, right? Also, a higher probability target area would be the middle of the range. Of course, if the dollar really gets hammered and starts pushing 89, you probably see this thing test its lows again as well, right? Because it's a reflection of the dollar. So great location for a short. Now, if it can't get that short going, which sometimes it happens in these situations, like it sets up with the failed high, and you're like, all right, great, and then it just fakes out and goes higher, right? We see that all the time. Then it's not a short. Okay, if it clears that resistance decisively and stays above it, then that's probably a sign that the dollar is turning. Okay, which will not be good for the stock market and all that other stuff. So just something to keep in mind there. So thank you for bringing that one up. Again, we've been slow with Forex. We haven't called out too many Forex pairs because there's just been a lot going on in the stock market. I mean, look at the euro, right? Look at this thing. We had that buy signal back here, which we didn't take. We didn't do anything with that, and now it's turning into a sell signal here. So, they're a real pain. I'd rather wait for more clarity than get caught up with some of these things. Okay, so good question there, Michael. I don't know what time it is where you are, but it's difficult. Oh yeah, DJ. Yeah, no, I know. If DJ, if you're still in India, yeah, I know. It's like you guys like 3 a.m. over there. It's nuts. I'd never want to listen to me at 3 a.m. So, okay, let me see what else we got here. Options are very expensive, way too high premium. Are you talking about the UVXY? Something that was $1 is now $2 to $3. It's crazy. Right. Yeah, that's the thing with those UVXY. When the premiums get ridiculous like that, it just becomes that much harder to really make money with. The market really needs to go your way, like right away. Okay, so that's why I hesitate to get back into those. But if something good shows up, I'm open to it. But I know the June calls are very expensive. I realize that. So I mean, we may have to do March, but I really don't like doing front month. Okay, so let's see what else I have here. Shashank wants to see AMD. So let's take a look at AMD. So AMD is a market stock, as we know. It's a semiconductor market stock. There's a trade that we had sent out a while back. I don't think that trade worked out. AMD's been such a pain. So it's going to pull back with the market. With the NASDAQ doing what it's doing, AMD is going to feel it. It's going to be like the first one to feel it, right? And look, and it's feeling it. So here's the thing. There's nothing to do right now with this. If the NASDAQ recovers, then there'll probably be a buy signal in here somewhere. But at the moment, there's nothing. Now, would I be interested in a long? Well, you have a consolidation here. That's not exactly bearish, okay? In fact, it's pulling into a good area, an attractive area. You're going right back into the middle of this previous consolidation back here. So that's an attractive area for a swing trade long. There's no setup. As far as inventory, it's also an attractive area because you're buying near a low. Keep in mind that if the NASDAQ continues to sell off, then this is probably going to go too. I mean, here's the NASDAQ. Wow, that's an ugly candle. Minus 500 points right now. Man, I'm afraid to even look at that UVXY. Let me see that UVXY. Did I sell too early? I probably, 1049. That's not that great. I mean, this thing was, it moved up quickly in 2 days. I had the $12 call and $15 call. The question is, does the momentum follow through? But all right, what am I going to do? So here's the thing with this. I mean, that's ugly. We have to see how this is going to close in 20 minutes. If it closes like that, that's not a good sign. But things can change. Just like yesterday, right? It closed strong, and then it turned into this today. So what I'd be looking for, anyway, for AMD and the rest of them, is this thing needs to hold this support. Okay? Let's take a look at the NASDAQ. Let's look at the SPX again, right? These things need to hold support. Otherwise, AMD, don't even go near it. Okay, so that's my answer for AMD. On BTC, we had our EW, our wave count, that looked pretty clear, wave 4 of wave 3. But how would you label the Elliott waves on the NASDAQ, both broad? Well, okay, so that's a good question, Michael. So back to the NASDAQ. The wave count, you can't go by this price action here as far as wave counts go, because this is too recent, right? So you really have to go far back to kind of get a sense of where we are and what we're doing. So going back to like the March and April lows, I mean, this thing, we'll probably have to go back to a weekly chart on this one, right? To really get a sense of where we are in the bigger picture. So here's a weekly NASDAQ. I mean, we can say that, I mean, this thing's been a bullish trend for such a long time. Look, from the 2009 low, that's where wave one, that's a wave one. Okay, we can count that as a recent wave one. You know, working its way up, I mean, let me see, wave, well, this, you could say this is a wave two in this area right here, consolidation, right? This was a wave three into 2019, broke out, wave three, four, yeah, and then this is the wave five. So we could basically, this is, if this is true, if this is a wave five, 1, 2, 3, well, 4 shouldn't overlap 1, so that's not, this is not a 1. This is all, this whole thing together is a 1. The pullback is 2, 3, 4, 5. So this is like a 5 of a 5 on the big picture. I mean, that's a really quick labeling on that thing. But the main thing with Elliott wave is you want to be able to count 5 waves, right? So if this is true, and this is like a fifth of a fifth wave, doesn't mean that it's going to give it all back right away. But if that's, you know, the broader impulse, if it's over, then we're looking at a very broad wave 4 range, which can go on for a few years, okay? What that means, it doesn't mean that we're not going to have any buying opportunities, but what it does mean is that we're going to have to be very conservative. We don't have any evidence yet because it's still too early, right? Just a negative day, a minus 500 point day is really not a good indication. It's still too early. We need to start taking out some serious supports, right? And the next one would be this one here. What is it, 11.6, right? We start taking supports out like that, then we're probably entering into a broader wave 4. All right, but it's still too early to tell. We may have bounces between now and then and all that other stuff. So I wouldn't react. Not a good idea to react to this. But that's a sense of the wave count anyway for this thing. Not a good place for, honestly, not a great place for long-term investors in my opinion. At least you shouldn't be heavy at these prices. If you're in the green, hopefully, you know, you've taken profits off the table, as you know, and if there is that massive pullback, you know, you have to be prepared for something like that. Again, it won't take place in one day. That type of pullback can take months to play out, which means there'll be plenty of bounces and plenty of opportunities to manage the inventory. You can buy puts to protect your portfolio. There's a bunch of things you can do. Okay, so let's see, POW, bonds. Market is pricing in rising interest premium. Okay, Fed controls the risk-free rate, but that IP is inflation factor that plays into the yield. Right, okay. So if you look at the 10-year, okay, can indirectly trade TYX through ETF TTT. Yeah, I mean, I would wait on that stuff because bonds for the most part are lousy trading vehicles. For the most part, they take forever to move unless there's drama. Like there's some drama right now, so you'll see some movement. But for the longest time, it's like watching paint dry. So I wouldn't go nuts with those. But they're a good long-term indicator. Okay, they can be helpful for that. Okay, hey Pepe, what do you think of A2M? Okay, let's take a look. A2M on the Australian Stock Exchange. Ooh. So you got, all right, well at this moment, trend is bearish, no question, okay? Since June, lower highs, lower lows, all over the place. Broke support, not good, not good. It was trying to bottom out there, and then it gaps lower today. Not good, okay? So the fact that it gapped below the support and it's closing there, it looks like, or it's closed, that's just, it confirms a lower low. So I would leave this thing alone. I wouldn't do anything with this. Maybe at some point it'll provide stability, but the problem is it needs to take out resistances to start proving itself. And your first resistance is around 1070, that 1070 area. Before this thing does anything, you got to take that out. Otherwise, it's just going to mess around and do a lot of garbage. Okay, so I would stay away from that one as far as longs go. And it's a tough spot. I wouldn't short it either. So some people say, hey, well, why wouldn't you buy this, right? It's a pretty much a failed low. Well, it's a failed low in the context of a bearish trend. I like to buy a failed low in the context of a bullish trend, or at least something that has a clear bottom that's nearby. You know, what's a good example? A good example is like back here, right? Here's basically a double bottom in a bullish context. Here's another one back here, right? See how they're testing the higher low? Those are the kind of failed lows I like to buy, not something in a bearish context. That's very high risk. It can work, but it's very high risk. Okay, so thanks for bringing that one up. Okay, let's see what else we got here. Hey, Kamal, nice to see you. Michael, I'm in Belgium. Oh, Belgium, wow. I hear they make good waffles. Okay, DJ, okay. So DJ, again, these aren't bad prices to put on inventory, not at all. As long as you're sized appropriately and you can take, you know, an extreme move in case there's one. That's where usually opportunity is, when things look their worst, when things look horrible. Caleb, do you think this Reddit squeeze has anything to do with it? Well, do with what, Caleb? I'm not sure what you're talking about. Maybe you could be more specific. Michael, thanks for your advice on Workhorse on Tuesday. Ah, yeah, Workhorse. So yeah, see, that's the thing. Whenever you see these, this was news. I guess they weren't their post office deal. The trucks, the post office is not going to use their trucks or whatever. So the thing gave back, like the thing was minus like 50% practically in a matter of hours. So when you see those situations, like Michael's question was, should I get out? Because he's in from he took his profits and he's in the trade risk free. So my position to Michael was, well, you're playing with house money, right? So you're not, if Workhorse gives back, you know, another 10 or 20 or 30%, you've taken out your investment. So you're playing with profits, which means you're a strong hand, right? So if you're a strong hand, there's no reason to react, even though it looks ugly. Visually, when we see things visually, it's just human nature. We want to do something. When we see something like this, oh man, this thing's going to go to zero. Looks like it's going to go to zero, because at the time, all you see is this, right? All you see is that red candle, and it looks big, and it looks like it's getting bigger, and you're like, oh man, that thing's going to zero. And then you turn on the news, and what do they say? Oh, well, Workhorse had their deal didn't work out, and 50% pullback, and investors are scared, blah, blah, blah. And you're like, oh man, this thing's really going to zero. And it's not going to zero. Okay? So that's when you're a strong hand, it's not a good idea to react. Now, like if you're in something, if you happen to be short something like this, great. You take money off the table when you see something like this, just like when we see these vertical moves long. But if you're long and you didn't use a stop, hopefully you're sized appropriately. You know, otherwise, this is why you need to have a stop. Now, again, Michael's playing with house money, so he's only giving back profits, right? That's really, is that really a risk? Some people say, well, you're giving back money, but it's house money. Okay, it's not his original investment. So there's a mentality to that that's very important to understand. It's what makes you a strong hand and not get shaken out at the worst prices. Okay, so now Michael has some options here. You know, he can do stuff. He can either reduce his position or let this thing recover like it's doing right now as we speak. All right, even if it makes it halfway back up, maybe he wants to lighten up on some, whatever. Point is, he's still in it and he didn't bang it out at the bottom. So cool, I'm glad that worked out for you, Michael. Okay, let's see. Hey, Alex, good to see you. Take a look at FTM. Okay, FTM, let's see. FTM, is this the right, is this correct? Let me see, maybe I don't have the right stock here. Let me see, FTM. Is it a coin maybe? Maybe it's a coin? What is FT? Oh, FTM USD. Okay, got you. All right. Yeah, so what's the price of this thing? 67 cents. Now here's an example of something that was sort of doing its own thing, right? Before Bitcoin reacted the way it has, it was kind of doing its own thing there, right? As the herd overreacts to something. Now, with Bitcoin pulling back or not really recovering, you got the bearish pin bar. Not a good idea to be long right now. You know, if you're in this thing, I hope you've taken some profit by this point. If this thing closes like this, now again, it doesn't guarantee that it will go lower, but usually when you see a bearish pin bar, if you take out the low of that pin bar, it's probably going to go lower, okay? Just something to keep in mind. So this is not a good place to buy, and hopefully you've distributed some risk along the way if you're in this thing. Otherwise, you know, if you want to get into the thing, wait for a pullback, at least to that 42 cents, something like that. At least let it pull back and stabilize before getting involved. Okay, thanks for bringing that one up. HS, what will be a good area to buy back DOT? That's a good question. So let's take a look at DOT. Now, as you can see, they're all pulling back, right? Let me pull up a better chart. USDT. Wow, looks kind of the same. So they're pulling back as expected. So where would be a good place to buy DOT? Now, if you're talking about a swing trade, well, we need to find support levels, right? That's the first thing we need to do. And these are the support levels. So your first one is around that $28 area, which it's touched, okay? But again, you can't step in front of these things. You need a setup for a swing trade. And again, that setup, Bitcoin needs to agree with it. If this thing sets up, like right now you have this inside bar developing, and some people may say, okay, that's a setup. Yes, it's a setup. But if Bitcoin fails, it doesn't matter how many great bullish setups you have in this thing, it's probably going to go lower. So that takes a lot of weight away from signals on these altcoin charts. They're a lot less reliable because they're dependent on Bitcoin, as opposed to a stock that can do its own thing, right? Speaking of that, how's CGC doing today? Oh, not so good. But there's a tendency for a lot of these stocks, right, to do their own thing. I mean, again, look at PubMatic. I mean, this thing went berserk, right? It's doing its own thing in the face of a huge sell-off on the S&P and NASDAQ, right? That's something that can do its own thing. That's what I would like to see from these altcoins, but most of them don't do that. So like I said, there's your location. Bitcoin needs to agree. So that would be one location. If Bitcoin pulls back further and these things get hammered, I'd be looking at that $18 area. Again, that's for swing trades. For position trades or inventory, if you're in this thing for the long term, any pullback is a good place to start buying. But the thing is, you want to buy less at the higher prices and plan to allocate more at the lower prices. So let's just say, again, you want to invest $1,000 into DOT. So out of that $1,000, you can break that into $10, $100 purchases. But instead of buying $100 at this price, you buy like $50 worth, right? Because it's still near a high. And if it pulls back to a more defined support, then maybe you buy $150 worth there. If it pulls back to an extreme support, then maybe you buy a $300 portion there. You're buying more as it goes lower, but you're not taking your full investment at one price. Okay, that's one way to control risk. Again, I'm not a big fan of playing that game with these altcoins because at some point, many of them, you know, they're not going to do well, you know, over the long run. So you have to be careful with that. Just like the dot-coms many, many years ago, many of them you don't even know about. Some of them you still do, right, like Amazon, but many of them you don't. So you just have to keep that in mind. All right, and that's the way you protect yourself from something like that is you have your allocation, whatever it is. Let's say it's $1,000 objective. That's all you're going to invest. Once you reach your $1,000 investment and you're all in, now it's it. You stop. You stop putting on more. If this thing goes to zero, you're out $1,000. No big deal. Okay, instead of investing more and more and more, and next thing you know, you're losing $20,000, which you don't want to do. Okay, so let's see what else we got here. KOD. What is that? Let's see. Is that a coin or is that a stock? Kodak Sciences, is that right? Okay, so this is, I know this one, you know, had all that drama not too long ago. Kodak Sciences. Oh, Kodiak Sciences. I'm sorry. I'm thinking of the camera company. So this is an interesting situation. Nice bullish trend. Okay. Nice support area developing here. You have a nice developing support area, and it's trying to develop stability off that area, which is what price? Around that 118 area. So this is definitely a good candidate for a swing trade, just not this candle. Not a good candle. You want to see an inside bar, you want to see a pin bar, you want to see something reverse and develop somewhere in this zone between like 118 and 120 basically. So if you get something like that, you could measure risk, right? From, what is this low here? 112. This thing is obviously a mover. So you're looking at least 6 to 8 points of risk, and you're measuring reward from, well, the middle of the range would be the first place. Basically the mid 140s, which isn't bad, right? That's good reward risk. And if it does retest that high, 160s. So the reward risk makes sense. You're risking, 6 to 8 points to try to make 20, maybe 30 points. That makes sense. And it's within proportion to do that. So, okay, I like it. If that's the stock you're talking about, I like it. Okay, DJ, I was talking UVXY and most of the other stock options in general. Gold mining options are decent. So DJ brings up an interesting point. Right, like UVXY June options, there's too much inflated premium in them, and that could be a real problem when it comes to time decay, which means you have to really be right on the direction when you're buying them like that. So that's why I hesitate with those. As far as gold mining options, yeah, you're going to get them cheap because they're hated right now. Right, as you can see, gold keeps getting beat up. The mining stocks are on their lows. No one's buying calls. So it's a good time. That's a good place to also, if you don't want to buy the stock, maybe you don't want to tie up the capital with the stock, you can buy the same amount in terms of options. As long as you're buying 6 months out, 1 year out, you should buy a long time. Don't buy 1 month out. But you buy a lot of time, if you can get them relatively cheap, which should be the case because no one's into gold right now, that's also another alternative to getting into the gold mining without having to buy shares of stock. And you can control more shares without the additional risk. Okay. DJ, for new members, we have webinars. Oh, that's a good, yeah, DJ brings up another interesting point. Yeah, so for those of you that aren't familiar with Elliott Wave, I've done a number of, I think I've done a couple of webinars, like on the corrective waves and the impulse waves. If you go to our webinar library, not all the webinars are available to free members. I think the Elliott Wave ones may be just for our members. Our paid members only. I don't remember. But we do have a library full of all the webinars that I've done that cover things like Elliott Wave. Thank you for bringing that up, DJ. Okay, no problem, Peppy. Hey, Travel, good to see you. He was talking about silver. Silver's price. Oh, okay. Yeah, I'm not sure if did I cover the right silver market? Because I pulled up silver. Peppy, if you have time, NTX. Let me see. How am I doing with time? I lost track of time. Oh, not too bad. Okay, I felt like I've been here for 2 hours. And it hasn't been 2 hours yet. Okay, no, I'm not going to do 2 hours today. All right, NTX. Okay, on the Australian Stock Exchange. Let's see. Let me find that. Is that right? I'm looking for the Australian. I don't see Australian Stock Exchange here. I see other ones. Maybe I have the wrong symbol. Okay, let me. All right, so I'm going to go to VN8 then. Let's see, VN8. Let's see. Okay, there's VN8. Okay. Oh, NXT. Okay, no problem. All right, so let's take a look at Vonex first. So this is on the Australian Stock Exchange. How much is this thing? Okay, it's like 20 cents in Australian dollars. And general trend is bullish. That's good. All right, it's a good start. You are at a support level. Okay, so this is a good example of a failed low or double bottom in the context of a bullish trend. Okay, that's much better than a bearish trend if you're looking to buy it. Now, this is a really cheap stock. I'm not a big fan of swing trading these because they can be very noisy. I mean, look how much time this thing spent in June. I mean, it spent 3 months not going anywhere. Look at that. That sucks. Right, so this might be good for longer term. You are at a good location for a long, and you can measure your risk if you want to take this as a swing trade. You could measure your risk from that 20-cent area. I mean, you could put your stop at 15 cents or even maybe 10 cents, and then see where it goes from there. But this thing obviously takes time to move. It had a recent pop, but it gave it back relatively quickly. So that's one thing I would consider for something like that. Thank you for bringing that one up. And then the other symbol there you said was NXT on the Australian Stock Exchange. Let's take a look. So NXT, okay. Similar situation. How much is this thing? Okay, so it's like 12, it's almost $12, okay, Australian dollars. And you have this situation right here. You have support, you have a general bullish trend, so you're buying near a support level, and it's been range bound in recent time. So that's all favorable for you if you're looking for a long. This would make much more sense for a swing trade compared to that Vonex because it's a better price, which means it'll probably move when it needs to. You have the failed low. Now here's the thing. You don't have a setup here in terms of the price action. So one thing you can wait for over the next day or maybe early next week is an inside bar. Okay, something like that would be ideal. Or let's see, I get like a little inside bar, or maybe you get like a pin bar or something. Okay, maybe you get like a pin bar over here, and then it pops up off of there. That would be an ideal setup off of this location where you could measure your risk from for a swing trade. You know, you do have some potential in here. The middle of the range is $12. So you're risking probably about a dollar. That's basically around 1 to 1 at that point. And obviously, it would make sense to try to go for $13, something like that. If you can get 2 to 1, that would be nice. Okay, it's within reason, but it's just because you're at the bottom of the range, and as you go higher into the range, you have all this resistance that you're dealing with. So it might be a kind of a pain to sit through that, but that's what it looks like. So I wouldn't really be over optimistic and expect like 3 to 1 or something like that in terms of reward risk. Okay, so good question there. Let's see what else we got. Photo sponge. Okay, cool. Thanks. I appreciate that. I would like to learn more about modern, okay, as well as Fibonacci usage. Can you recommend any resources for an intermediate trader? That's a good question. As far as Wyckoff, I don't know of any particular books. I'm sure you can Google that on Amazon or something and find books relative to that. As far as Fibonacci, there's a author. Her name is I can't think of her name right now. Candace Brown, I believe is her name, and she wrote a couple of books on how. So those would be good resources. Candace Brown, I think that's her name. And she wrote a number of books on Fibonacci analysis, and that would be a good place to start. There's another woman, her name is Caroline Borodin, and she's also another Fibonacci. She learned basically from Candace Brown and all those people. She's also written, I believe, a book or maybe 2. If you Google these people, you can find their resources. But those would be 2 authors if you really want to get into the details of that type of analysis. Those are 2 authors off the top of my head that are pretty good. Okay, so thanks for a good question. DJ, NBev. NBev, look at this thing. New age beverage. This is one of those, they were going to put pot in beer, okay? And back when, the pot stocks were all the thing, yeah, they're going to put it in beer. You're going to have pot-infused beer. Great. Well, I don't know. So far, the idea doesn't seem to be going anywhere. You're at a support level right now. I have not been a big fan of this stock. It's been nothing but a pain. I mean, going back, look at this thing. It bottomed out at, what's this price here? Around $1. And it worked its way back up to $4 and then got hammered recently on that earnings. I believe it was CGC earnings or someone had earnings, and the whole sector just gave it all back, right? CGC went from like $53 to like $38 like in 2 days. So I would not take this. Is definitely not a swing trade candidate. If you're interested in this thing, Constance Brown, DJ, that's it. I'm sorry. Where did I get Candace from? Constance Brown and Caroline Borodin. Thanks for putting that in the channel. Yes. So DJ is my fact checker. So whenever I come up with fake news or information that's inaccurate, DJ is first to correct me. So thank you, DJ. So yeah, so this, as far as inventory goes, if you want to take a bite of this one, I don't like it. I actually own some of this piece of garbage, and I'm waiting for someone to buy them out or something, but I'm not a big fan. So, I don't know what to tell you on this one. Like I said, the trend is generally bullish. If the pot sector, the cannabis sector, continues on its general bullish trend, this thing should improve. I mean, look, CGC is the leader. Look, looks very similar, right? So I'm waiting for CGC to turn itself around. Right now, there's nothing there. Tried the other day. I was almost going to call a swing trade on this, but as you can see, it gave it back today. So now I'm going to leave it alone. But if this thing turns, I still may call a swing trade on this, which would be a positive for NBEV. But the real one that I'm after is Tilray, because when Tilray moves, it moves, right? This is the one I'd really like to get a piece of on the next leg higher. Even if it goes halfway, that would be a nice move. So anyway, that's my story about NBEV. And, so for swing trades, I'd be considering CGC or Tilray. If you want inventory, you could start working with NBEV now since it's at a lower price. But like I said, well, I mean, you know what you're doing with those, so I don't have to give you the risk talk. Okay, cool. So thanks for bringing that up. Let's see what else we got here. How do you think of ADA? All right, so Cardano. Let's check that against Tether. So here's an interesting situation. Bitcoin is trying to recover, right? But it's not doing a very good job. Cardano, on the other hand, looks like it's acting relatively strong. Took out the inside bar high, and it's a long signal. But here's the thing. So it looks good in and of itself, but if Bitcoin fails, right, then this thing is probably going to fake out up in this area here. So it's a very high risk area to buy. Even though there's a nice long signal there, you have to always compare it to Bitcoin. Bitcoin does not look good right now. In fact, that's a bearish pin bar that's developed in Bitcoin. So if there is bearish follow through, and we see a test of 40K or something, Cardano is probably not going to have much of a choice, and it's probably going to test lower. So I don't like these prices. I wouldn't take the swing trade. And as far as inventory, I don't like buying highs either. If you don't have any and you want to take your small bite, hey, any price is a good price, but these are not opportune prices. With these altcoins, really, you want to wait until they're hated again to really start taking inventory, like the way gold looks right now. Okay, and even then you want to be selective because some of them are probably going to go to zero. All right, so just something to keep in mind. But as far as the signal, yes, there's one. As far as Bitcoin agreeing, Bitcoin doesn't agree. So that makes this much higher risk. Okay, so thanks for bringing that up. Good example. Kev, okay. Okay, cool. Yeah, cool. I mean, that's a decent looking chart, Kev. All right, so DJ, gold, $20 call, January. Now look at that. Okay, gold. So Barrick Gold, GOLD, 2022. So you're looking at, what, 10 months maybe? Just about 10 months of time for $2.50. That's cheap. That's really cheap for that much time. So that's definitely a good example of a cheap option. And we like cheap options. Okay, Caleb, Reddit exclusive referring to the silver's price. Oh, yeah, so there's a lot of, they tried doing that squeeze thing with silver, just like they similar to GameStop, or it's a similar idea where they were trying to talk the price up because there is a silver shortage. But when it comes to pumping, whether it's silver, whether it's a stock, I don't like the idea because unless you're the pumper or unless you are in that chat room and you're the first to know about the pumping, most likely they bought it way before you. And by the time you're getting into it, you're probably taking it off their hands. So if it's being pumped and I'm not in that room and I don't know how long it's being pumped for, I want nothing to do with it. Because as you know, right, let's take a quick look at GameStop here. As you know, oh look, GameStop popped a bit. Interesting. But I was going to say, as you know, this is what happens when you buy the high of the pump. Okay, this is what happens. And then you bang it out here, or you get margined out over here. And then look, yesterday there was a nice little pop. Missed that one. I wasn't going to send out any trades in GameStop, but look at this thing today. So it's still up 17 points. It was as high as 184. Is that real? So if that's great for day traders, but I don't know who else it's great for, especially if you shorted it. Okay, some people shorting calls and stuff. I don't know why anyone would short calls on that thing. Anyway, okay, so I just want to bring that up as an example of what happens when you buy the top of a pump. So it's like gambling. You don't know when that top is going to show up, and the pumpers are in way before you. That's why they're pumping it. Okay, so anyway, thanks for bringing that one up. Let me see what else we got. And okay, I got NXT. So Caleb, my question on if that was the reason why we see, so I don't know if that's the reason why we're seeing that. I mean, it's possible, but I don't consider that. If silver's acting relatively strong, I'm not going to point to that one reason because that's oversimplifying it. There could be other reasons. I mean, there is a physical silver shortage. I know that for a fact. So there could be a number of variables why silver is acting that way against gold. Either way, the only thing I want to note is that it's acting relatively strong. That's all that really matters to me. I don't care why it's acting relatively strong. I just want to know that it is. And then I could work with that. Until that relationship no longer is working, that's all I want to know. Okay? So in a sense, you're simplifying it that way. But by doing that, you're allowing whatever other variables are actually making it relatively strong, you're basically accepting them by accepting the chart. Okay, so thanks for bringing that one up. Let's see what else we got here. DJ, Wheaton Precious Metals, $45 call. 2022, January, $4. That's not too bad for that amount of time. $4 is a little high. For the $45 call, I mean, Wheaton Precious Metals right now is what? Fooling around 38, 39, 37? Let's see. Where's Wheaton? Look at Wheaton. Will Wheaton. 37.75. And they want $4 for a $45 call? Man. But it can get there pretty quick. But I mean, it's a little high, but all right. It's not ridiculous. So it'd be nicer, DJ, if it was like $3 or $2.50 or something. But hey, who knows? It may go there if these things push a little lower. Thanks for mentioning that. Hey, Thela, can you please look into altcoin, Litecoin, and BNB? Okay, so let's take a look. For a swing trade long, so let's see Litecoin. So like I was saying before with Litecoin, there's a signal to buy, right? That pin bar, I'm sorry, the inside bar situation that we have right here that I'm highlighting right there. But the problem is, again, Bitcoin doesn't agree. So that's the problem with these, right? So although it looks good, if these things managed to trade on their own, then that would make sense. Like if this was a stock, I'd say okay. Even though with the stocks though, if you're facing this bearish momentum, I'd probably be a good idea to wait for some stability. But in this case, you got two of those factors working against it. Bitcoin doesn't agree, and it's lacking that stability. So I would hold off right now. I just think it's high risk, okay, for a swing trade. That's why I will not send that out as a swing trade to our members. But again, I'm very conservative. It doesn't mean it won't work. I mean, if Bitcoin decides to just turn around out of nowhere, this thing is in a good position to push higher. But again, you're dependent on Bitcoin. Now, Binance Coin, right? BNB USDT. So now this is an example of a coin. I know Alice brings this up a lot. I always criticize the altcoins and say they really have nothing to offer. But BNB is at least an example of a coin that they have worked to provide some type of value for their holders, right? They have all kinds of things. Alice mentioned they have staking. They have all kinds of stuff going on, right? So that I guess it makes it more. It gives that they're doing something to make it just a great idea. Okay, so fine. That might be a coin that's worth looking at from an investment perspective if they have all those great value features. But again, you have a potential buy signal developing. But what if Bitcoin pulls back? Okay, what if Bitcoin goes to 40K? I would suspect that this thing is probably going to follow, right? Because really, I don't think this thing really trades on its own. Again, I don't follow this one carefully, and there may be some different factors involved, but I wouldn't call this either, okay, as a swing trade. I would wait. I would like to see a double bottom develop, okay? And I would like to see similar price action on Bitcoin. If we get something like that, okay, double bottom developing in this area, which is what? 231 area? No, I'm sorry, 186. 180s, you get like a double bottom developing in that area, that would probably be a better spot for a swing trade long. By the way, in terms of impulse, this thing may have one leg higher in it because I can count 4 waves, and this is the 4th wave, right? The 4th wave it's in right now, so you may have one more leg higher in this thing. But Bitcoin is going to need to agree. Otherwise, it's just going to turn to garbage, okay, most likely. So again, look, I'm not always right on these things. I'm just going by the relationship that I know of with Bitcoin and looking at the risk because of that. If Bitcoin was in a better situation, I'd say, hey, you want to take the long? It's like buying more Bitcoin, right? They're all one big Bitcoin trade. That's how I look at it. Yet recently there have been some amazing moves in some of these things, but if Bitcoin had not made those highs, I wonder where all these things would be. All right, so just something to keep in mind. Okay, no problem, Pepe. HS, how do you differentiate a spinning top and a pin bar? Well, that's a good question. Well, a spinning top is basically a doji, right? That's what a spinning top is here. So I'm going to draw a quick picture. Let me see if I could draw a quick picture for you, right? So this is what a spinning top looks like typically, right? It looks something like this, right? The high-low range is usually the candle wick, right? And then the open to the close makes up the candle, okay? Whether it's a red candle or green candle, doesn't matter. It's a sign of indecision. That is what a spinning top is, okay? It's an indecisive candle. A pin bar is usually a range, right? An open to a close, but then it has a long wick, right? That's a pin bar. Looks like something like that, okay? Sometimes with a pin bar, the ideal pin bar doesn't have a wick on top, but sometimes it could. Remember, these things aren't exact. So that's the difference between the two types of candles. The pin bar is really a sign of a reversal, while the spinning top is a sign of indecision, which could lead to a reversal. Something to keep in mind. So thanks for a good question. Thanks for bringing that up. All right, so yeah, DJ mentioned the names of those authors. Thanks, DJ. Okay, cool. Hey, Micah. Okay, no problem. Taylor, no problem. All right, so I think I answered everyone's questions. Wow, I talked a lot today. But I'm going to wrap this up now. I want to thank you all for your great questions and great input. You know, thanks, DJ, for all the detail there with the options and everything else. A lot of great information in this channel. So if you haven't checked it out, check out greenbridgeinvesting.com. All the information is in the descriptive portion of this video. If you click on the show more, you'll see all the links, how to get to the 7-day free trial and all that stuff. Okay, so I don't have to talk about it for 3 hours. All right, so again, I want to thank you all for your participation. If I missed your question, or if you have another question that comes to you after, we do have a free chat room. Come check it out, okay? And if you haven't pressed the like button yet, please press it. And also register for the channel if you haven't registered, so that you can get a email notification every time we stream. So I'll be back next week as far as the stream goes. And of course, we have Talking Markets next week as well. All right, so thank you all again, and I will see you next time. Thanks all for watching.